Realty Income Corporation, or known as its stock ticker, O, is a real estate investment trust that has been paying out monthly dividends for decades. They focus on triple net leases that provide consistent income to investors looking for exposure to real estate without owning it directly. It is a core piece of my own dividend portfolio, and today I wanted to break down the company's current standing, future growth prospects, and its biggest weaknesses. I make these videos to learn even more about the position I own, and don't consider it personal investment advice. I'm just the dividend guy. This company has been consistent since its founding in 1969. Launched with the goal of creating reliable monthly income for shareholders, Realty Income has grown into a commercial real estate powerhouse, branding itself as the monthly dividend company. Over the years, it's built a reputation for stability and consistency, becoming a go-to for income-focused investors who value dependable returns. Realty Income's business model centers on acquiring and managing single-tenant freestanding commercial properties leased to clients across various industries, including retail, industrial, and office sectors. The company's unique approach relies on long-term net lease agreements, where tenants cover most property expenses, such as maintenance, insurance, and taxes. This structure not only lowers operating costs for Realty Income, but also ensures predictable cash flow, minimizing risk while maximizing stability. In 2023, Realty Income reported solid performance with around $3.3 billion in revenue and net income of approximately $1.1 billion. These financials underscore its effectiveness in managing properties and maintaining profitability year after year. As of November 2024, Realty Income's annual dividend is $3.16 per share, yielding around 5.5%. A strong payout for dividend investors. And it doesn't just stop at reliable dividends. Realty Income has consistently grown its dividend over time with a 5-year compound annual growth rate of around 4.4%. This steady growth in dividend payouts speaks to the company's long-term commitment to returning value to shareholders. Add to that over 650 consecutive monthly dividends, and Realty Income's reliability as a dividend stock is hard to beat. Realty Income's history, strategic model, and dividend growth make it a rare gem among real estate investment trusts. For investors seeking stable, recurring income with a steady growth trajectory, Realty Income combines the reliability of a legacy company with the financial strength to keep delivering returns, regardless of market cycles. Realty Income Corporation is a classic example of a REIT that's built for the long haul, with a strategy designed to deliver consistent returns while also ensuring resilience in an unpredictable market. A big part of what makes Realty Income so reliable is its focus on diversification, stability, and growth, all backed by a long-term approach that protects the company while positioning it for future success. First, let's talk about their tenant diversification. Realty Income's portfolio includes thousands of properties across the U.S. and internationally, leased to clients in a wide range of industries like retail, industrial, and even office space. With well-known tenants like Walgreens, 7-Eleven, and FedEx, Realty Income isn't just tied to one sector's fortunes. Its strategy is to diversify tenants and industries, which reduces the risk of over-reliance on any single client or market. This approach helps to buffer the company from downturns that might impact one industry more than others. Realty Income has also implemented a careful acquisition strategy in recent years, focusing on high-quality properties in desirable locations. Rather than pursuing rapid expansion, the company has been selective about its acquisitions, aiming for properties that will produce stable cash flows. It's also increased its presence in international markets, particularly in Europe, which not only adds geographic diversity but opens the door to new growth opportunities in economies outside the U.S. Another strategic move that adds to Realty Income's long-term resilience is its emphasis on net lease agreements. With these leases, tenants are responsible for property-related expenses like maintenance, insurance, and taxes. This structure minimizes Realty Income's exposure to property costs and makes it easier to maintain consistent cash flows, an invaluable trait for a REIT focused on predictable monthly dividends. This setup not only limits operational risks, but also allows Realty Income to operate more efficiently than many other REITs. In terms of growth, Realty Income has been investing heavily in technology and data analytics to enhance property management and optimize tenant relationships. By leveraging data to better understand tenant needs and market trends, Realty Income can make more informed decisions about where and when to invest. This strategic use of tech strengthens their position, ensuring that they're not only maintaining but enhancing property value and tenant satisfaction over time. Financially, Realty Income maintains a conservative balance sheet, avoiding excessive leverage and keeping debt at manageable levels. This fiscal discipline provides them with the flexibility to seize growth opportunities when they arise without overextending. In times of economic uncertainty, this strong financial foundation gives Realty Income a cushion to maintain its dividend payouts and weather market volatility. For investors looking at the long-term picture, Realty Income's approach is both proactive and stable. By diversifying its tenant base, focusing on strategic acquisitions, using net leases, adopting data-driven insights, and maintaining financial discipline, Realty Income is not only protecting itself against risks, but also setting up for future growth. This balance of steady income and growth potential makes it a reliable cornerstone for any long-term dividend portfolio. Realty Income's current leadership, particularly under the guidance of CEO Sumit Roy, is a significant factor in its reputation as a rock-solid investment. Sumit Roy, who took the helm as CEO in 2018, brings extensive experience in the real estate and REIT sectors. Having been with Realty Income for more than a decade, in roles such as Chief Operating Officer and President, he has a deep understanding of the company's operations, culture, and long-term goals. This continuity in leadership, promoting from within, and having a leader who knows the business inside out, gives Realty Income stability at the top, which is crucial for a company focused on long-term investor returns. One critical feature of Realty Income, and REITs in general, is that they must distribute most of their profits to shareholders in the form of dividends. Under U.S. tax law, REITs are required to pay out at least 90% of their taxable income as dividends, which allows them to avoid paying corporate income tax at the federal level. This setup is a double-edged sword. It provides investors with reliable income, but limits the company's ability to reinvest profits into growth. Realty Income has mastered the art of managing this trade-off, using its strong cash flow and selective acquisition strategy to fund expansion without compromising its dividend commitments. For shareholders, this structure means that Realty Income is consistently incentivized to prioritize and grow its dividend payouts, making it a standout choice for income-focused investors. Under Roy's leadership, Realty Income has not only maintained but continued to increase its dividends, keeping it one of the most dependable income-generating stocks out there. The combination of experienced leadership, a disciplined growth strategy, and a legal obligation to distribute profits creates a highly appealing package for anyone seeking stable, long-term income from a REIT. Realty Income may be one of the most stable REITs out there, but it's not completely immune to potential headwinds. A few key challenges could impact its growth trajectory or profitability if not carefully managed. One significant headwind is the risk of rising interest rates. Like many REITs, Realty Income relies on borrowing to fund new acquisitions and property improvements. Higher interest rates can increase the cost of this debt, which could put pressure on profit margins. Additionally, when interest rates rise, dividend-focused investors might be tempted to shift their money into bonds or other fixed income investments, which could reduce demand for REIT stocks like Realty Income. To their credit, Realty Income has a disciplined approach to debt, but rate increases could still add cost pressures. Another challenge comes from shifts in the retail sector, a large part of Realty Income's portfolio. While the company has been smart in choosing reliable, credit-worthy tenants, retail can be a volatile sector, especially with the ongoing rise of e-commerce. If major tenants in retail struggle or close stores, Realty Income might face vacancies or rental renegotiations. The company has taken steps to diversify, with tenants in industries like industrial and logistics, but retail remains a core component of its business. Lastly, regulatory changes could pose challenges. As Realty Income expands internationally, it must navigate a range of tax laws, property regulations, and leasing norms, which can differ significantly from those in the U.S. Any changes in REIT tax law, for instance, could affect how much Realty Income can distribute to shareholders or reinvest. International expansion has been a valuable growth driver, but regulatory complexity adds another layer of potential risk. I currently hold hold a personal position in Realty Income worth about $2,000, and it's one of those stocks I especially appreciate for its monthly income. That regular payout adds a steady stream of cash flow to my portfolio, which is a nice change from the standard quarterly dividends you see with most stocks. Realty Income has proven to be a reliable earner, and given its strong fundamentals, I'm seeing it as a core position that I want to keep building. As I expand my portfolio, Realty Income stands out because it balances stability with growth potential, making it an ideal candidate for a larger investment. It's not just about the dividends, but also about adding a solid income-generating stock that I can count on for the long term. So I'm planning to add more to this position as part of my overall strategy, building it up as a reliable income anchor in my portfolio. If you enjoyed this video, I would appreciate you taking a second to press the like button and comment down below. It really helps the video do better, and I am planning to make a video like this at least once a week to learn more about my personal positions in my $116,000 dividend portfolio.